Welcome to the Daily Insights That Matter. The auto sales in November clocked record high numbers as they registered a 26% growth on an annual basis. Now let's look at the factors which assisted in the auto sales hitting record high numbers and also look at the expected trend going forward. Now, after growing by over 50% in October 2022 on a year-on-year basis, automobile retail sales increased by 26% in November, again year-on-year. As per data shared by the Federation of Automobile Dealers Association, around 23.8 lakh units were sold in November this year compared to 18.93 lakh units sold in November 2021 and 23.44 lakh units sold in November 2019, which was the pre-COVID year. Now, all categories of automobiles saw a double-digit growth in November, with three-wheelers registering an 80% growth and tractors registering a 57% growth. Commercial vehicles saw a 33% rise in sales. Two-wheelers and passenger vehicles also registered a 24% and 21% growth respectively. While November clocked the highest sales in history of Indian automobile industry, they also came in 1.5% higher when compared to the pre-pandemic sale numbers of November 2019. Now, better availability of model mixes when compared to the previous months, new launches and the rise in rural demand were some of the factors which have supported the sales in November 2022. The positive demand from the festive season continued well into the new wedding season. Auto sales, as we already know, is a key economic indicator as they provide a snapshot of consumer demand for big-ticket items. Going forward, the trend is expected to continue in December as well. Multiple dealers have started announcing discounts for the slow-moving products for the lower variants with a view to clear their year-end stocks to counter price hikes by OEMs, which are expected to be announced soon. Now, with global central banks raising interest rates and the rupee weakening, several foreign investors pulled out money from the Indian stock markets at record pace in the first half of this calendar year. However, they turned net buyers in the second half of 2022. As seen in the graph on your screen, according to SEBI data, so far FPIs have withdrawn $18.1 billion from the Indian stock market heading into December, which is more than the $13.3 billion taken out by the same cohort during the global financial crisis of 2008. However, the record pace of outflows from foreign investors who own close to 40% of the Indian market's free float has had a little impact on the performance of the Indian stock markets. MSCI India, an index which is tracked by most global investors and funds, has seen a year-to-date returns of 6.6% from 1st Jan to 5th December 2022 in the local currency terms, making it the best performing stock market amongst those with a market capitalization of more than $1 trillion. The MSCI All Country World Index has seen a 70% fall in 2022, while the MSCI Emerging Market Index has slipped 21% so far this year. In 2022 so far, the dollar returns on the Nifty 50 were down 4.3% against a 16% fall witnessed in the S&P 500 and the 19% decline seen in the Shanghai Composite Index. Now, despite the record outflows, the domestic institutional investors, or the DIIs, have registered record inflows. So far this year, DIIs have net bought local stocks worth $30 billion, which has helped the Indian markets deliver the best returns amongst peers. Seeing this, a lot of foreign investors have now turned more bullish on the Indian stock market. Since July, FPIs have made net investments of $11.5 billion, largely because of the increasing market confidence that global interest rate hikes are likely to peak soon, and also because the India's economy is seen to be relatively better placed compared to most of its peers. Additionally, a new capital expenditure cycle clubbed with strong earnings expectations and relatively moderate inflation situation are likely to help Indian stock markets attract foreign investors in 2023 after the record sell-off in 2022. So what does all of this news mean for you? Record auto sales in November are testimony to the strong consumer demand within the country. Despite the festive season ending, the demand continues to be robust, and with multiple steps being taken by automakers to sustain sales growth, the trend is expected to continue going forward. This will therefore have an indirect positive impact on you. The Indian markets have shown tremendous resilience despite a record sell-off by the FPIs this year. That said, the strong fundamentals of the Indian economy coupled with the commencement of the new capex cycle and a strong earning growth expectation would attract FPIs back into the Indian markets going forward. This will therefore have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.